And good afternoon. Welcome into Market Talk for this Thursday, May 6th. Great to have you here once again. A good afternoon. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web. Facebook, Twitter, Instagram, all of our social media links are there. Our YouTube channel, you can watch and listen to the podcast via YouTube. You can also find all of our streaming sources, Spotify, iHeartRadio, Apple Podcasts, SoundCloud, Stitcher, so many more options. You can find us anywhere you listen to your favorite podcasts or radio shows. You can also find our radio affiliates on our website too, markettalkag.com. Well, different day, same story. We had strength in grains again, different fundamental kind of taking the lead here today and pushing this market higher. Let's talk about it. Let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon. And, we keep watching this grain complex every day. It seems like one of these fundamentals, as I mentioned, takes the lead and pulls this grain market higher. And we saw that today with this soybean complex and the edible oils market just kind of set a fire under the bean complex today, and that pulled everything else along.
Yeah, that seems to be the case. And again, that's just a sign of a good, strong market here, even when we get a little bit of news that's maybe disappointing. Like we saw that cancellation on some corn sales yesterday by China. That didn't seem to phase the market at all, maybe for a little bit. And really wound up turning into opportunities for buyers to step into the marketplace. We're watching that as we kind of been going through this over the last handful of weeks here. Any weakness just turns into afternoon strength. And as we kind of, for the most part, close stronger. We've been watching the spreads do a lot of action, and you mentioned now today it was edible oils, as we saw palm oil put in some record prices on the overnight or new high prices, and that carries over into that soybean market. So it just seems like, what's the story today? We still got things going on that are still supportive overall. Brazilian weather for corn. The tight supply picture, strong domestic basis for both corn and beans here in the United States. What's happening in terms of wheat, in terms of the the drought conditions and difficult crop conditions. Now we're getting corn and wheat at prices where we can substitute for some feed. How does that all change in the picture? So a lot of things going on, and right now you got a market that's looking for money flow, and the money is moving at the right direction. And just let's not even forget about what's happening with the U.S. dollar as well. So that's looking to possibly break to the downside, adding just a little bit more to the fire.
Well, let's talk a little bit about, you mentioned supply and demand, and obviously that's one of our big fundamentals. Weekly export sales out here today. Sales weren't necessarily amazing, but shipments, again, especially on the corn side, I know were really strong here again this week.
Yeah, those numbers continue to be very, very strong, and that's what this market really needs in terms of making sure these bushels get shipped out. We love the fact we've got strong sales on the books or record sales on the books. It's the key is getting them on a boat and getting them out of here, and that'll help confirm that supply demand picture, which the market is probably pricing in, a 1.2, 1.3, maybe even tighter carry out at the end of the marketing year. So we see weekly export inspections come out on Monday for last week's numbers, and those were 2 million metric tons. Export inspection number comes out today again, well over 2 million metric tons, just showing that strong shipping pace is there. And that's what we're seeing on that domestic basis right now in the cash market that's out there. Is you've got exporters wanting these bushels so they can get them on a boat and get them overseas. You got ethanol firing back up again at some pretty decent levels. In other words, to trying to make some money and be profitable. At the same time, you still got the feed usage component, and all three of these hands are diving into a pile that's getting smaller and smaller, and only creates more volatility and more movement in this market higher.
Definitely. And let's focus in a little bit here on the soybean side of the equation today. And that edible oils market, as we alluded to, that was the big fundamental driver in this market today. Whether it be soybean oil, canola, palm oil, you name it, this market really catching fire. It's almost like kind of thinking back to the ethanol boom. It seems everyone's talking about biodiesel and renewable biofuels and this and that made from these edible oils. And, we've seen it take a breather, I would say, for a few weeks, but now we've kind of caught fire once again. And I mean, the soybean complex just strong throughout the day. New highs and new crop. We're over that $14 mark now in November. Bean oil strong. So really a lot of things to look at here in this soy complex, John.
Yeah, no, typically strong bean markets are led by the soybean meal, but that seems to be definitely not the case this year. Soybean meal seems to be the offshoot of what's going on in that oil market. And, right now, given where prices are for oils, we're probably crushing beans more for oil than we are for meal. But again, it comes down to, like you said, it's a combination of the green movement, using more edible oils in terms of making biodiesel. And at the same time, again, we still just have global concerns regarding food and securing food supplies. And edible oils come right into that mix. And that is something that has been high demand for, basically going on back to the summer here. You've seen bean oil market make an explosive rally since back to July. It continues to work itself higher, and that's been lifting this bean market up. And at least at this stage, it doesn't feel like it's ready to cap out anytime soon, as that competition on that edible oil market is still there. You're seeing it in, like I said, canola oil prices have been at all-time highs. Palm oil prices hitting all-time highs. So it's more than just the soybean oil market itself. It's just the combination of everything, and this just race for food. The UN came out today with their annual, their or monthly summary in terms of food prices. We're higher again for the 11th consecutive month on global food prices. Again, that's being led by higher grains and pork prices, sugar prices, and those edible oils all pushing to multi-year highs. So again, here's countries trying to secure food supplies as we're coming out of the pandemic, and they want to make sure those supplies are there.
Well, we think about this boom in edible oil side of things, and it makes a guy wonder. We're still seemingly fighting for new crop acres here, and we're in the first part of May. Do we see a late switch to soybean acres here just because of the boom in this market and people maybe wanting to get in on the edible oil boom that we're seeing right now? I mean, what are you hearing from producers that you work with and talk to? Are we going to see a switch to some soybean acres here late?
Obviously with the planting pace we saw this week and how things really jumped, especially in the Western Belt, realistically, what acres are we trying to switch? Northwestern plains, areas of that nature, which aren't going to be probably the most productive overall in terms of yield. So we'll have to see how that plays out. Now, honestly, I've had a handful of people in terms of my producers today or this week mention to me, I got an extra 100 acres with nothing on that. I'm probably going to plant corn. Again, as one guy said to me, it's not so much about the planting. We like planting corn. We like harvesting it better than we do soybeans. So that's some of the factors that come into play. So it's going to be interesting to see what the numbers come out at the end of June. Yeah, we've seen this strong surge in prices as both November beans and December corn have said, hey, we want those acres over top of. And, obviously we've seen good moves in spring wheat and things like that have been also fighting for these acres in this last window here. So, realistically, the market's trying to do what it should have been doing back in January and February, which is trying to find a way to win those acres in. And almost a little concerned it might be a little too little too late.
Yeah, well, and I know last week you and I talked about first notice day for the May contract, and we've seen that shift here the last few days. We kind of got July starting to catch up to May now in these markets, and then we've slowly, within a day or so, shifted our conversation to the new crop side, and that's where a lot of our strength has been here. The back half of this week is trying to maybe buy some of those acres and really seeing money flow into new crop, whether it be corn, beans, or wheat. That's really where the strength has been here the last couple of days, John.
Yeah, realistically, up until this week, the front month spreads or the bull spreads, as we call them in corn, have been doing all the lifting. As we saw, like you said, the May contract surge out, and now the July contract trying to close that gap a little bit. And then all of a sudden, it just maybe this market's starting to realize, given the supply picture, we don't need a $1.30 spread between July corn and December corn, and we need to tighten that window back up. And that's really seems to be also the other factors where, getting some of this inverse out a little bit, tightening up that gap between the two. And at the same time, again, trying to buy some of those acres into the marketplace. Beans overall, if you look at the strength we've had, it's been consistent, between the front end and the back end. Look at today, we're 27 higher in July and 25 higher all the way out to January. To me, that's just a market saying, hey, we need supplies. We want value. We need to bring the whole market level up. And again, these are things we probably should have been doing back in January and February when this market decided to work sideways for 2.5 months.
Well, and I look at us here today as well in those new crop contracts, breaking some of those, theoretical barriers. We broke through $6 December corn. We broke through $14 November beans. So now it's like, okay, where's this market going to go from here? And I think that a lot of folks are getting nervous just with all of this upside momentum, all the volatility, because it just doesn't seem like there is a top in sight right now, whether I'm talking corn, beans, or even this wheat market to an extent, especially spring wheat. It just doesn't seem like there's a top there. And I'm getting a lot of nervousness from farmers in the countryside watching these prices continue to climb, John.
And I kind of hear the same thing. It's almost getting very, very stressful because you don't want to make a mistake given the value that's out there. And I've fielded a couple of those calls today too. The infamous, how high is it going to go? And right now, I'll say, here's my next target. Trouble is, we've blown through those target steps very, very quickly over the last handful of weeks. I thought we were going to pause at 5.50 in December corn. Well, that didn't last long. And then I thought maybe $6, and that doesn't last long. And I'm still targeting maybe 6.40, 6.50, and then maybe we can put a little bit of a top in. We'll have to watch that USDA report next week. It's going to be very, very interesting to see how they handle the 2021-22 crop. It's the first time we'll get some estimates on that. Obviously the acre number is low, considering what we got off the March side of it. So now what's the USDA going to do with the demand side, and how much change is in that balance sheet from there? We got to watch that USDA report. We've had tendencies to spike around those reports, and then we sell off for a couple days on some profit taking as the market's buying into them with some optimism, and then the numbers come out and we kind of buy the rumor, sell the fact mentality. So watch that next week. Sure does feel like things want to work higher. As a producer, what do I need to do now? Maybe you sit back as the momentum continues to carry these markets higher, but maybe use some stop sale orders underneath. Write a note down somewhere and say, hey, if November beans close back under 14, I get some more beans sold. If corn, drops back under 625, I move a little more corn. Instead of shooting for upside targets, kind of let the market run, and then you move stops underneath of it. And when those numbers cross, that's when you pick up the phone, build some good sales. You're still going to be putting a heck of a base together. You just got to be willing to accept the fact that this thing can move 20, 30 cents one way or another now. But overall, you're still going to be in a great spot if you get those sales in.
Well, we talk a lot about staying disciplined too, and I think that all ties into being disciplined is getting some of those, stops in place and whatnot, and knowing also how much you theoretically can move for new crop. Because we talk weather issues, that U.S. weather picture. A lot of folks are starting to look at that closer and closer. We've turned cooler and wetter here the last couple of weeks in many areas, so we start thinking about that. You don't want to overextend yourself marketing too much new crop, but you don't necessarily want to let this opportunity for profit pass you by.
Exactly. And I've talked with a few people about that. And, some areas have got some rain, and we picked up some real nice rain here this week, which was much needed. But you don't have to go far away from us, and they didn't get much at all. And, so there I had the same producers that, kind of saying the same things to me. It's like, boy, I'd like to sell a little more, but I don't want to have to find my way out of this if this crop doesn't grow the way we need it to. So there's a lot of different things we need to look at. I've been kind of off on the put side of the equation. I'm, really starting to think about that between now and probably the 1st of June. Seasonally around that Father's Day window is kind of when we put seasonal highs in. So I want to make sure we have some type of coverage just in case the black swan event occurs. Okay. Again, now we started new trading limits this week, so we can move 40 cents a bushel on corn in a daily trade. We can move $1 on beans in a daily trade. We've seen some washout days come at us pretty quickly. And if there's just a day that the money says we're going to move to the sidelines for a while, it could be a very, very aggressive sell-off. So making sure we have some form of defense underneath this thing is going to still be something I'm going to really start pushing again. As we kind of broke through the next tier, it's time to move the puts up another level and at least make sure we got something underneath this market, because who knows when a black swan event occurs. It can happen, in the matter of just something overnight.
Definitely. Let's talk livestock. This cattle market, we've been talking about it now for a few weeks with the constant rise in grain prices, feed prices. Cattle producers really been taking it on the chin here. A lot of worry with a lot of cattle ranchers, just seeing the cost of feed going up and everything, getting nervous here. And you look at this cattle market the last 2 days, we've started to put a little bit back on. We feeder cattle not so much today, but it's almost seeming like maybe cattle are settling into a range now after we've taken plenty of premium away from this market. But what are you seeing in cattle? Is there an upside right now?
I'm still a little bit cautious. I've been fairly friendly to the cattle market all the way through the spring here, and this kind of break lord, I'd say, caught me off guard, but it was a little more aggressive than I thought it would be, and that just truly became a money flow situation. The funds decided to walk away. They were sitting about 90,000 long contracts here about a month back. Now they're down to 50,000. So they've taken a lot of air out of the market. Some of that is seasonality here as well. We look at what futures are doing. We look at what the cash market's doing. Maybe it took the event that happened this week for the first time since 2001 when June hogs started trading over top of June cattle. For some of the money managers said, you know what, maybe cattle's cheap down here. Cash traded 118, 119, nothing spectacular. At least it was steady to firm this week. In June trading at 114.15, the last couple of days. Looks a little bit more of a value play there. Realistically, as much as we bounced around here, August isn't moving much. We're just kind of holding around this 118 area, consolidating, working sideways. So I'm a little cautious here. Feeder cattle charts don't look very good. Monthly charts on the front end of the cattle market look cautious. Wouldn't surprise me we get another hard break here, especially if feeders let go one more time, and the money flow just wants to take it out of the market. Now, with that, third and fourth quarter, I've been talking about that for a long time. I know we're off our highs now. I still think there's some very good value out there. The biggest thing I'm starting to heard it from a cattle producer today, that they're starting to hear cattle coming in at extremely light weights because, like you said, nobody wants to feed $6, $7 corn. What was a 1,500-pound steer 3, 4, 5 months ago is turning into a 1,400-pound steer and out the door because they don't want to put the feed on it. That's going to keep supplies heavy, put pressure on the market in the short term, but in the longer term, it's going to tighten up that supply picture. And again, another reason why I like that third and fourth quarter.
Well, and speaking of tightening the supply picture, we move over to hogs, and that seems to be one of the big things there is, despite we're moving into summer grilling season and opening things back up steadily with demand for all, beef and pork. Pork is already tightening up, and you mentioned it. I mean, trading lean hogs at a premium to cattle, we haven't seen that in years. And it's just amazing to watch in this market, John.
It has been. And, it's kind of like the grain markets are at this stage. Like this morning, we priced in export sales a little bit yesterday with that good, strong close. We got a number that was pretty solid, actually, for pork shipments or pork sales today. But the market sold off $1.50 down or so on the open. And you just saw the buyers step right back in and lift this thing back up and finish, at least on the positive side of the day for the majority of contracts, new contract highs, et cetera, et cetera. It sounds like a broken record. I've been saying it basically for the last, month here. That market still looks like it wants to work higher. The cash market stays strong. The index continues to trend higher. Retail values are kind of slowed down around this 110 to 115 area. We're 114 at midday today, but that's still a very, very strong price in terms of what we're moving this product through. The other thing too, you look at cold storage. I know it's back to the end of March, and a lot of things have changed since then, but pork supplies are at a multi-year low in storage at the end of March. It just shows you, even though we were still moving some pigs through the system, that product is moving out extremely quickly, and it's going to keep that market supported overall. China's still dealing with their African swine fever. We continue to hear reports coming out of that country dealing with that issue. So right now, this market's anticipating this demand to probably stay well into the third and fourth quarter. So really, I'm looking at this market overall, and there might be some value out there in those October contracts and later. That might want to have some call options over, especially if we're going to have pigs in that window to look to sell into down the road.
John, any other final thoughts you have for us here on this Thursday?
Well, again, like we talk about the volatility and there's the outside markets, what's going on. U.S. dollar looks like it's trying to break through support. So that could be the next little piece to the puzzle if we see that continue to fall. And that'll only add more fuel to the commodity fire. Globally, you got to keep an eye on what is happening in terms of this global demand. The thing is, global demand will stay strong as long as the supply side stays tight and there's competition. You got a lot of free dollars floating around out there from all the stimulus packages from multiple countries, and all this money is trying to pour into the commodity sector. And that's really that picture that we're going to be watching going into the spring and then later spring into the summer in terms of how it handles this market. And believe it or not, in terms of grains, we probably really aren't even talking about U.S. weather.
Well, I know you guys do a great job helping out producers with questions they have for their marketing plan. TotalFarmMarketing.com is a website, and you guys have a lot of great info there, or people can give you guys a call or shoot you an email to connect with you and find out more, can't they?
Feel free to call anytime, 800-334-9779, or my email is jonh@totalfarmmarketing.com. Love to sit down and have a conversation, or I'll reply back to any questions you have.
Yeah, and like you said as well, I know the website, totalfarmmarketing.com, you said it before, a lot of great resources there as well for people to check out. John, appreciate the time as always. Have a great rest of your Thursday, great weekend. We'll talk to you next week.
Sounds good. Thanks again for your time. We'll talk to you next week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, May 6th edition of the show. I'm Jesse Allen. Have a great